Hello, everybody, and thank you for tuning in to Beam Global fourth quarter 2024 corporate update webinar. I'm Luke Higgins, the Internal Investor Relations Manager here at Beam Global. Internal Investor Relations is a new role at the company and is part of our ongoing efforts to better communicate to the investor community the great value that Beam Global is creating. As today's presentation will show you, we are confident that Beam Global is a fantastic company that is perhaps not getting the recognition it deserves in the public markets. Beam Global trades on the Nasdaq under the ticker BEAM. Shortly, I'm going to introduce you to Desmond Wheatley, our President, CEO, and Chairman of the Board. But we're going to give you a few minutes for people to dial in, and while we're waiting, we're going to play you a short video of our impressive global operations. Please stand by while we give others a few more minutes to dial in. Desmond will start the webinar at the end of the video. Okay, hi, it's Luke Higgins here again. We're about to start the webinar, so it's my great pleasure to introduce you to Desmond Wheatley. He's our President, CEO, and Chairman of the Board. He's also, incidentally, the inventor of our flagship products. He's going to take you through some slides talking about where the company has been, where we are today, and where we are going, along with the discussion regarding the share price and industries we target. With that, it is my great pleasure to introduce Desmond Wheatley. Desmond?
Okay, Luke, thanks very much for that introduction, and thanks also for setting up this webinar. Thanks also to all of you for joining us today to get spend some time with us hearing about what we're up to. We just passed the 2 forward-looking disclaimers notices. I want you to take those seriously. I'm going to be talking about things which include my opinions, and I'm going to be making statements about the future, which are also based on my opinions. And you're also going to see some financial metrics which are not in every case is GAAP. I will make sure that I make it clear to you those that are not GAAP and explain to you why we're including them. But let's be clear on that. In front of you, you can see an agenda. I'm not going to stick too tightly to the agenda. We're just going to go through some slides. I think most of you know how I operate, tend to be pretty unscripted, as you can gather from my inability to press the mute button before I got started here. But I just want to give you a good impression of what we're up to, what we've been doing over the last couple of years, what we're doing right now, and just as importantly, what we intend to in the future. And some of that will also, involve talking about where the share price is today, what we think about that, what we've observed, and what we think and hope may happen in the future. So it's really going to be a general discussion about the company. There's a lot to cover, obviously, in a fairly short period of time, so I'm going to kind of speed through it a little bit. Okay, first of all, let's just take a look at our revenues over the last couple of years and talk a little bit about that. I think most of you are aware that we had some pretty extraordinary growth into 2023, really all the way back from 2020. We did $6 million in revenue in 2020, $9 million in 2021, $22 million in 2022, and then just under $70 million in 2023. And we're a simple company. Revenue is a perfect proxy for product produced. So you can imagine it was a bit of a scramble to increase our capacity to get to the point where we could produce 3 times more product in 2023 than we had in 2022, which was already twice what we'd done the year prior to that. So a lot of very, very dramatic growth during that period of time. Now, if you look at 2024, that's a year-to-date number there. And what you're going to notice about that is that 2024 year to date, so this is up to the September 30th, the 3rd quarter, is actually 2 times more revenue than we produced in any full year in our history, except for 2023, which was an extraordinary year of growth. We don't anticipate not having extraordinary growth. We're going to continue to grow extraordinarily into the future years. But as I've said often in my earnings updates and other calls that I've done with you, there's going to be lumpiness in that. It's a brand new industry. We're bringing brand new products and technologies to a brand new industry. You're going to see a little lumpiness in it. Our 5-year CAGR, 68%, just under 70% there on 5-year CAGR, and still a lot of growth going on from a trend point of view. And again, just to really belabor that point, up to end of 3rd quarter, we'd already produced more revenue, that's sales and product into customers' hands, than in any full year in our history, except for 2023. Similar story with gross profitability. I've gone on about this a lot over the last several earnings calls. We're really focusing very heavily on gross profitability. And what you can see there is where gross profit has lain for the last several years, with really dramatic improvements starting in 2023 and then on again through 2024. Now, of course, gross profit is impacted by several things. Our ability to manage our costs of goods sold, we're clearly very good at that. That's what this chart's telling you here. But also fixed overheads will have some impact on that. We have to allocate a certain amount of fixed overheads to the proportionate number of units that we produce out of the product, out of the factory, out of our factories, I should say, across the globe. If we have a reduction in volume, then we're going to see more overhead allocation, which will have a negative impact on gross profit. But the good news is that our unit economics continue to improve. And as I said during the 3rd quarter earnings call, we were getting unit economics on EV ARCs in the region of 40 to 50% gross on EV ARCs. And that's trickling down through with the overhead allocations. That's trickling down through, and you're able to see that now at a GAAP level. So improving gross profits and that 70% 5-year CAGR on revenues, again, showing that we're making progress where this is concerned. At the end of the day, you got to make money. The bottom line, it doesn't matter how much revenue you produce. It doesn't even matter how much gross profit you produce if you're spending more than that. And what you're looking at here is our net loss over the last several years. And what you're seeing there is an improving picture. Net loss is reducing dramatically as we head towards profitability. And that we certainly believe, and we're certainly on a trajectory to do that. And that's what we're in business to do. So again, an improving picture where the net loss is concerned. And of course, that's largely to do with that increasing gross profit. We have fantastic discipline where controlling costs are concerned at this company. Any of you who have visited the factory, and I encourage all of you and any of you to do that if you have time and you find yourself in the San Diego region or in Chicago or in Belgrade or in Craiova, what you will find is that we have a pretty Spartan environment. I do not have a fancy office. We don't have any fancy coffee machines or foosball tables or any of the other things that are common in technology companies. Our rule here is quite simple. If it doesn't make the product better or sell the product, we don't invest in it. And that's why you can see that we've managed to do such a good job of maintaining an incredibly low operating expenses and incredibly low cash burn throughout our history, frankly, but as more so now perhaps than ever. So improving revenues, improving gross profit, reducing the net loss, heading towards profitability, as we certainly intend to do. And then, of course, this is a very important slide too, zero debt. I challenge you to find any other company amongst our peers or anybody in our size or realm who can say that. Again, this just comes back to discipline around cash. A lot of people have said to me, Desmond, why don't you lay on some debt? Well, because you have to pay for it. We've seen other companies very famously have bumps in their share price because they've been made eligible for Department of Energy loan guarantees and all sorts of other stuff like that. Borrowing money is not necessarily a path to profitability, and it's not revenue, and it comes with cost, and that cost eats directly into your net profitability. So we go out and borrow money and we're paying even SOFR plus 300 basis points, which is where our credit facility is right now. You're talking about just under 10% that we would be adding. Borrow $1 million, you got $100,000 of interest expense hitting your net at the end of the year. Now, we have a lot of credit out there, so we've got a lot of dry powder, but we're not using it because, as I say, it's expensive and we haven't had a good need to. So zero debt is an important part of our cash discipline. And frankly, one of the reasons that we're in business and thriving where so many of our peers no longer are. Okay, so lots of great metrics: improving revenues, improving gross profit, improving net reduction in the net loss there, no debt. And yet, look at our share price over these last several years. Some of you have taken this entire ride with me. I have taken this entire ride. And I have never sold a share in the history of the time that I've been at the company, except to cover taxes associated with when I'm paid with shares as part of my income, my earnings, that is. So I've taken this ride with you. It's obviously not a chart that we're thrilled about at all. But again, we're controlling for the things that we can control, and that's what I've just showed you in those improving revenues, gross profits, net loss improvement, and zero cash. So, we got to think about a little bit about why that share price is doing that. But before we do that, let me just show you this as well. It's not just our financial metrics which are improving. We're also just making across the business improvements. What you're looking at here is kind of a boring chart, but it's just showing the increasing numbers of engineers that we have on staff, increasing number of countries that we're doing business in, increasing number of products that we have. We were for quite a long time pretty much a one-trick pony, as it were. We no longer are, and I'm going to show you that in the following slides here. And remember, when you're looking at these increasing numbers of engineers and increasing number of countries and products and all that sort of stuff, you're doing that within the cost model, which I've just illustrated to you with our improving net situation and growth situation. So it's not that we're just going out and investing lots of money and spending. We're doing it in a very disciplined way, and it's all designed to grow our business. So let's come back to the share price for a second. Here's Beam's chart over the last 3 years, and again, it's not a chart clearly that's not how we're managing the business to do this. We're managing it to do completely the opposite. So we're going to ask ourselves: is there something that Beam is doing that's causing this? Is there something peculiar about the way we're operating? Or is there something that we need to learn from this to change? Because we want to learn from everything, and we work every day to make sure that we're improving this situation. But let's just take a look at a couple of others. What I'm going to show you here are other stocks in the same industry. These are peers of ours. So we're going to show you Blink, and ChargePoint and Shoals and SPI and Rivian and Nuvei and a whole host of others. What you're going to see here is that all of these are tickers in our space. Although we all have different business models, we all make money in different ways. We are all involved in EV and in sustainability. So what I'm looking at when I look at this chart is a couple of things. First of all, clearly the Beam is not an outlier in this, except to say that we're actually performing a little bit better than most of our peers. Certainly were doing so up until the recent election. But there's something sectoral going on here, and this doesn't seem to be specific to any Beam activity, unless everyone else is either doing exactly the same things that we're doing, making the same mistakes, I suppose you could say, if you believe that's what's driving the share price where it is, or unless somehow our activities are altering everyone else in the market's share price. But clearly, both of those things are nonsense. So what we're looking at is something sectoral here, and it's unfortunate. We just as we saw the run up to when we were trading at $75 a couple of years ago, or $74 a couple of years ago, that was sectoral as well. Everybody else's chart did exactly the same thing. We have seen a decline across the board, everyone in the space, most of them not performing as well as Beam. Now, listen, I am not saying I'm happy with our chart. I am not saying I don't feel responsible for our share price. I'm not saying that we shouldn't be working constantly to make it better. What I'm saying is that we do feel responsible for it, and we are working constantly to make it better. We're taking a lot of very extensive and dramatic moves. Everybody's working very, very hard here to improve this picture. But at some point, we have to recognize that we are part of a sector, and that all shares, good, bad, and ugly, in that sector have pretty much identical charts. And we just have to be realistic about that. As Clint Eastwood said, a man's got to know his limitations. And as ambitious and enthusiastic as I am about Beam, I have to accept the fact that we're operating in an environment where it's been pretty tough ride for most of the stocks in the space. So please just understand that. It doesn't mean that Beam is a bad company. And if you're invested in Beam, it doesn't mean that you chose a bad company. It means that the investment that you've made is in a sector which currently is out of favor. We are going to continue to do everything that we can to drive towards profitability and to expanding the business, and sort of concentrate on the things that we can impact, and not allow ourselves to become too despondent around things that we cannot impact. So just a couple of things that are specific to us, though, because I don't want you to think that I'm simply suggesting that we have no role in this. The big negative right now about the business that I would have to share with you is that we have definitely seen a decrease in federal orders in the second half of this year. And in fact, and I don't know if it's entirely due to this, but basically once it started looking as though we were going to have an administration change towards a Trump administration, we saw some holding back on federal orders. Now, the good news is nobody canceled them. Nobody told us, hey, we're not doing that. But the purchase orders that we thought we would convert from pipeline to backlog faster, and have historically converted from pipeline to backlog faster, they're idling. They're not moving. And part of that is the reason that we have such a huge backlog right now, $200 million backlog. It's not that we're fluffing up our backlog. It's just that the indictment of that pipeline, rather, not backlog, to be clear, $200 million pipeline, not backlog. Part of the indictment of that, frankly, is that it shows our inability to convert it to pipeline at the moment as fast as we have done in the past. Now, that doesn't mean we haven't made any sales. You can see here, just in this year, we sold over $10 million, $11-12 million to federal government entities. I just said we've seen a slowdown, and we have, particularly in the second half of the year, but it doesn't mean we haven't made sales to them. And we've made many other federal sales as well. They don't expand to the dramatic nature of the very large army order that we got in 2022, or a couple of the others, but we're still selling to the federal government. It's just that we have seen a slowdown in that pace. I believe it will return, frankly. I think right now we're looking at a lot of uncertainty. No one's quite sure what the new administration is going to do about this. But as you will see in the following slides, I'm not counting on that. I'm making sure that I'm immunizing ourselves from the threats around these federal orders, or slowing federal orders, and we're doing that by finding lots of other ways of selling our products. We did have a record first order of purchase orders in 2024. Again, so don't be concerned that if you think that we're not selling, we clearly are. You saw that in the first chart where I showed you that we've done twice as much revenue year to date as we've done done in any full year in our history except for 2023. That's not selling. That's just not getting those very, very large federal orders that we got in 2022. And again, we still have a 70% CAGR over 5 years. The right-hand chart there, by the way, just shows what's happened to our share price since the election, and we certainly have been beaten up very badly. I'm not saying that I know that that's due to the election. I know a lot of people think it is, and it's possible that we've been beaten up worse than some others because we're not just EV, we're EV and solar and light wind. So we're kind of in some ways the worst of both worlds. If you're in that drill baby drill camp, that sort of makes us look like we're more vulnerable. But again, this is a big wide world with an awful lot of opportunity for expansion, and I'm not going to allow myself to be overly concerned about that because we'll build back out of it. Now, look, we've seen this movie before where these sectors have a tendency to go through these boom, bust, boom cycles. I am not expert enough, and I am not telling you that I know that EV will go through this cycle. I'm just saying that lots of industries have. There's a list of them here. Most of you are aware of this. Most of these industries have been through exactly this. We're clearly somewhere on that red line at the moment. I can't say where we are. I don't know if we've hit bottom yet. Nobody knows that. And I can't say that I know for certain that there'll ever be a green line to the right of where we are on that red line. All I'm saying is that history has a tendency of repeating itself, and we've seen these boom bust boom cycles before, and as I showed you, we're not alone. Our share price is just in the same bucket as everybody else's is in this space. What I'm absolutely confident is that electric vehicles are coming, massive amount of infrastructure will be required to do it, and the other things that we're doing around energy security and smart cities products and all that are all very relevant today. And so I'm absolutely confident that we're going to see a return to growth in the spaces that we're in, and I believe that we will see this boom bust boom cycle take place, but I can't know it, and I'm not trying to give you advice or anything. I'm just pointing out to you that giving you the history lesson that none of you need. You've all seen this before, to show that this is a movie we've seen before. And the key thing is, I think if Warren Buffett was looking at this chart, he'd be saying that there's an opportunity here, and so would many others. But of course, that's entirely up to you to make that judgment. But just don't think of this as something specific to Beam. Don't think it's something specific to EV and sustainability. This is something that happens regularly. It's a cyclical thing, and none of us can know when it's going to end and when it's going to turn around, or even if it will, but it typically has in the past. So why do I feel so strongly that things are going to get better? Well, there's just a whole host of macro conditions. First of all, we're going to see global electrification. There are going to be about 2 billion cars on the roads by 2030. That means we're going to need 400 million plus rapidly deployed or publicly available chargers. I travel the world. I know that everyone's facing exactly the same challenges as we are in the United States in terms of lack of grid capacity, how long it takes to deploy these things. So rapidly deployed, highly scalable infrastructure that doesn't require a grid connection should have a very good opportunity as we move forward here. And of course, as you all know, we're first movers in this space. We have lots of great patents and everything else. We definitely have a pretty important seat at the table. The European Union, California, and 17 other states have announced bans of the sale of internal combustion engine vehicles in 10 years from now. So this is coming like a freight train down the tracks. It's going to require a massive amount of infrastructure to serve all this stuff. So I still feel very, very bullish about this. You may have heard some negative stuff about EVs in the press and about how there's not growth and all that sort of stuff. It's just not true. The growth is not as fast as it previously was, but there's still a lot of growth going on. The last couple of quarters of this year have slowed down a little bit more. And again, some of that in the US is to do with what we're seeing with the election cycle, I think, and just a sort of general malaise around these things. But at the end of the day, more and more people are buying electric vehicles, and the combination of government tailwinds and what I believe will, at the end, being a consumer pulled industry is going to require a massive amount of infrastructure, and that's what we're in the space to deploy. Energy security, also more important than it's ever been. We have more blackouts and brownouts than at any time in our history, and yet we're more reliant on electricity than we've ever been. We make products that continue to produce electricity during those times, and there's lots of examples of them being used in that way. And then I think you're just going to see a general trend towards decentralization of the grid, and of course, we are absolute first movers where that's concerned. So let's talk about a couple of the risks to the business, or at least perceived risks. I mean, end of EV growth, I hear that all the time. You guys are making EV charging infrastructure and the EVs are falling off a cliff. They're not. Okay, I hope everyone on the call understands how unreliable the press is. Doesn't matter what side of the political spectrum you're on, you can't believe anything any of them say. They tend to write stories to get that are salacious. We're not seeing the end of EV growth, not in the US nor globally. Slight slowing down of growth, but no end into it. Some people will say, well, there's an end to US federal investment in EV. In fact, we had one federal buyer say to us that he didn't think that EVs are going to do anything after November 7th. He's not right. The US federal government is going to continue to invest in electric vehicles because everyone else is electrifying. The federal government can't be the only people that don't have them. I can tell you, I had a Marine Corps, very senior Marine Corps officer telling me that they were electrifying largely because they were concerned that in 10 years from now, they wouldn't be able to get spare parts or anybody trained in fixing internal combustion engine vehicles. That was an interesting point of view that I hadn't even considered. But I can tell you again, in my global travels, I'm seeing nothing but electrification, and the federal government can't stand on its own. So we will see a return to investment from the federal government, has the largest fleet in the world, and we already have a GSA contract and a blanket purchase authority in place with them. And again, we're still selling to them, just not at the speed that we were previously. Some people think that we've had too much product concentration and indeed too much customer concentration. I got to tell you, I agree with that. We have been a bit of a one-trick pony and are essentially sold to one customer, government, for the most of our sales. Not all federal, of course, state and municipal as well, but it's kind of one type of customer. So that could be a risk. Competition from others. I mean, there's no direct product competition, but of course there are other options to get charging in the ground. And then ultimately growth, profitability, and cash. People are worried. They see our share price declining the way it is, and they think that that's somehow an indication that we are not going to grow or be profitable, or we're going to run out of cash. None of those things are true. Again, I showed you the charts up there. This is not specific to Beam. It's more sectoral. And in fact, our own financial fundamentals are improving, not getting worse. But let's talk about what we're going to do about some of these perceived threats. Well, certainly we're going to move away from reliance on the U.S. federal government, even the U.S. as a market, the only market that we've been operating in. We're going to continue to operate here, continue to invest and grow in this market, but we are expanding geographically very significantly. We've done a great job of reducing our direct costs. I really got to take my hat off to the team there. You saw that in that gross profit improvement, and certainly the unit economics at 40 and 50% on EV ARCs in the third quarter show you the direction of travel that we're going into. We have many more products than we used to, and I'll spend some time on that in a minute. So that's moving us away from that concentration. And then from a customer diversification point of view, we're making great moves for that, and I'll show you some of that as well. We're expanding our moat. More intellectual property, more patents, more vertical integration makes it harder for it to compete with us. And then we're taking some really interesting steps to multiply up our sales force. Everything that we've done in the past has been done with a very small internal sales team. I'm part of it, but we're now going out and doing great work in terms of multiplying that up without adding to our operating expenses. And then disciplined operational costs. I already covered that. We are hyper disciplined where cash is concerned. I don't think anybody could question that. And then we're increasing to barrier to entry, which is basically the same as that expansion of moat here. So let's look at a couple of instances. Geographic expansion. If I'd been giving this webinar a couple of years ago, this would have been the map that I would have showed you. And to be honest, we have very small penetration in Brazil and a very small penetration in Canada at the time too. So it was mostly a US global map for us a couple of years ago. This is what it looks like today. We're now operating in 17 or 18 nations with product in 17 or 18 nations. And of course, that's just given us a massive increase in opportunity. I've mentioned before, Europe is the largest market by far in the world for cars, 405 million cars versus 320 million in China, 290 million in the United States, the other two biggest markets. But we're also moving into the Middle East and to Africa and sub-Saharan Africa, huge opportunities for growth for our types of products in those markets as well. So geographic expansion. This is immunizing us from what we're seeing in if there's any slowdown in terms of what we're seeing in the federal sales and US sales in general. Salesforce multiplication I just mentioned. Okay, so what this means is we're finding ways to get people out telling our story, describing our products, and doing so without adding to our operating costs. All of these groups that you see here are well established, well known, highly successful, a great fit for our space, and none of them are costing us a dime unless they sell product. Okay, they're all performance-based, success-based sales, and they're out there selling. Now, we signed them up midway through last year. They've already made sales. We already have EV ARCs now in Spain as a result of their efforts, and lots of great opportunities developing, particularly in the Spanish-speaking Americas through them. So Europe has already added sales for us, not just the big flagship sales that we made, for example, to the British Army, but other sales as well along with that. Green Tech, a Middle Eastern group, very well positioned. I just spent time with them in Amman, Jordan. They're again established group with great relationships. I met with the Jordanian royal family, the Hashemite organization, the Royal Jordanian Army while I was over there, and they're connected and doing business with a host of others as well. They love our products. Our products, of course, are ideally suited for that part of the world, and so I think we'll see some great opportunities coming out of that. But again, we're not spending money on it. We help them, we assist them, we give them marketing collateral. We train them. I'll visit them. I'll do on the business development tours with them, but we're not paying them unless they're successful. Benzina Zero, fantastic new addition to our family. They actually make e-mobility solutions, scooters, bicycles, and a whole bunch of other electric stuff. And they are based in Australia and also in Italy, in Europe. So they're now selling for us in Australia, where they have Domino's Pizza as a customer for their e-bikes, one of the other big pizza brands, and also the Australian Postal Service. And of course, they're delivering mail and pizzas out in the outback where there are very little infrastructure at all. Our products are ideal for powering these electric scooters and motorcycles and other things that they're using to do that. They love it. When I was in Italy visiting them recently, I went to look at their factory facilities and their storefront facilities there. And while I was there, they set up meetings with 3 or 4 different mayors and a bunch of other government people as well, so that we could sell our combined offerings to them. So they're really active already in this. And then in Ethiopia and sub-Saharan Africa, again, this has raised a couple of eyebrows. Why would we be in Ethiopia? Well, it's simple. Ethiopia has banned the sale of internal combustion engine vehicles. I was just on a call at 5 o'clock this morning with a very large Ethiopian business, 115,000 vehicles under their management, and also with the US Embassy was on that call as well. They're going to need a massive amount of charging infrastructure very quickly. So Ethiopia is a poor country. Yes, it is. But do they have money to make this transition? Of course they do, because right now they import all of their oil. So they want to stop spending money importing oil, and they want to start driving on their own sunshine for free. And then sub-Saharan Africa, I believe that Africans will go to mass adoption of electric vehicles without ever having a mass adoption of internal combustion engine vehicles, just as they went to cell phones without ever having wired telephony networks. And I'm not alone in that belief. So it's a gigantic opportunity for us. Okay, just a couple of the acquisitions that we made briefly. I won't spend a lot of time on this because most of you will be up to date on this, but a couple of years ago, we acquired a battery company called Allcell. We'd been using their technology for about 10 years, so there was really no technology due diligence that we had to do there. This has reduced our production costs. In fact, it's played a great big role in reducing our direct costs, this acquisition. We defended our supply chains. We got a bunch of patents and other new products and new customers as a result of this. So if you look on the right hand there, we're kind of ticking many boxes here. We got geographic expansion, we got reduction of costs, we got more products and more customers, and made it harder to compete with us. We're really the only company that I'm aware of in the industry that makes our own batteries and puts them into our products, but we also put them into a whole host of other things: submarines, drones, medical devices, and all kinds of other things. So this has been a great acquisition. It was very well crafted. I don't have time to go into the details. It was an all-stock deal. Please look it up and read the parameters around it, and I think you'll agree with me. It was a very well-crafted deal. A couple of years later, I've felt strongly about moving into Europe because, of course, it's such a huge market for our products, as I've already mentioned. I've been looking at candidates for a long time. These deals take a long time to do, by the way. That you don't just sort of find somebody and then just acquire them the next week. This is months and sometimes even years of negotiation and working through documents and everything else like that. So I just want you to understand that because it's germane to something I'm going to talk about in a couple of minutes here. Anyway, we made another excellent acquisition here. Got 35 advanced degree engineers, a couple of hundred employees. We've got 6 acres. We own the buildings, the land, the machines, and everything. They're all on our balance sheet. By the way, they assessed for more than I paid for the whole business. I got the buildings, the land, and everything else assessed independently for more than we paid for the entire business and everything else that went along with it. It's just we've got 250,000 square feet under roof there, contrasted with 50,000 square feet under roof in San Diego. We're already making EV arcs and a whole bunch of other products out of that environment, and the core business that we acquired is growing. So it's just been a fantastic acquisition, and it's helping us get into Africa in the Middle East because we're able to put our products in 20-foot shipping containers and ship them just about anywhere else in the world. And the final really important bullet point on this here is the economics in Serbia are fantastic. I mean, we can make an EV arc, ship it to a customer in the United States cheaper than we can make an EV arc in San Diego and ship it to a customer in the United States. So you might say, well, why wouldn't you just do that? Well, we're going to continue manufacturing in the US because we are BABA compliant, Buy America compliant, and many of our customers, the federal, state, municipal, and even some corporate customers require that. So we're going to continue to operate here, continue to reduce our costs here, but we'll get lots of contributions from Serbia. In fact, we're already importing parts from our Serbian factory into our San Diego facility, which is helping again to further reduce our costs here. So again, geographic expansion, product expansion, customer expansion, and a fantastic team of people over there. There's a pretty good video of a walkthrough that I did shortly after this. If you haven't seen it, look that up on our website. And I think you'll agree it was fantastic. Now, one of the other things that's come up frequently since I made that acquisition, because we raised money. We went out, we did a raise to make that acquisition, and I've been, had many people tell me that was why our stock is where it is today. Again, sort of ignoring all the other the stocks in the space who's performed exactly the same way as we have. Some people have suggested that it was because we raised that money. Well, the red dot on this chart shows you when we went out and raised money to do that. We did that public offering there, 6/22 of 23. If you look at our chart after that, what you'll see is that, in fact, if anything, the stock traded up a little bit after we did that, and then performed better than our peers thereafter. I haven't put every single one of them in that I showed you on the first one because the chart just looks so crowded, but believe me, they all look the same. So I think to draw the conclusion that because we raised money and made that European acquisition, our share price is at today is, again, just ignoring what's happening across the sector with stocks in general. Because as you can see, we in fact traded up and then performed better than our peers throughout the period after that. I'm confident that was a fantastic acquisition. It was also a very good raise. If you want to check the details on that and talk to anybody in the investment banking space, they will tell you that the raise that we did at that time was absolutely extraordinary. No one else got a deal done like that at the time or since, frankly. But it clearly, if it was the reason that our share price went down, for some reason everybody else's share price went down in exactly the same way thereafter, although disconnected to that, which I just don't believe, of course. Something else is going on. And then finally, we made another acquisition in Serbia, which is another very good one. This was to get us into the power electronics space. Our products today are a combination of our own in-house manufactured components and others commonly available off the shelf components, a lot of power electronics. We pay a lot of money for them because we only buy high quality stuff because we want our products to be high quality. And at the end of the day, we're paying margin, we're paying for packaging, and we're paying for capabilities that we don't need. And frankly, our engineers have to work pretty hard to get other people's power electronics to do this really specific and unique things that we need them to do. And then the last point is the majority of failures that we see of our products out in the field are not caused by our sloppiness or something wrong with our design or our products. In fact, it's usually failures of third-party power electronics, even though we buy the best that we can get our hands on. So for all those reasons, I went out and acquired some very, very talented people. We got a bunch of new customers. This was a company that brought revenues and is cash flowed. By the way, that was the same with the Amiga acquisition that we did, profitable at the bottom line, cash flow company, and again, growing the core business this year, the best year yet. And so this acquisition that we made here in power electronics will essentially allow us to make our products better, less expensive, and again, create more barrier to entry. Really talented group of people, and also helping us with the new products that we're bringing to market, giving us a lot more horsepower where that's concerned. Another very good transaction. Look it up, read the deal, combination of cash and stock, but very well crafted, and essentially putting little or no risk on our current shareholders, because I built in all sorts of procedures, like they can never sell more than 4% of weekly volume in perpetuity. They get restricted stock. I did all sorts of other stuff built into all the transactions that I did. And by the way, that tends to mean that I get fewer transactions done than some of my peers do, and they take longer because I drive a very hard bargain on behalf of you, our shareholders. And I'm not going to stop doing that. So these European acquisitions have enabled us to do a bunch of things. One of them is get further into this kind of smart city product side of things. I mean, certainly we'd had a patent on BeamSpot since 2019 and had made by the way, it was called EV Standard previously, if you remember that name. Part of the terrible names that I come up with, but our marketing people have renamed it to BeamSpot. And I prefer that now. But anyway, I'd had a patent on that since 2019, hadn't produced any of them because I didn't know anything about building streetlights. The acquisition we made in Serbia, the first acquisition, is one of the largest streetlight manufacturers in Europe. And so I really like streetlights. Powered infrastructure every 50 or so meters in every street in every major city in the world. Just imagine what we're going to be able to do when we start putting sensors and machine learning and other power electronics, batteries, and renewable energy and all that. And that's what we've done with BeamSpot already. We've already produced the first of these. We've already sold the first of these. And I believe that's going to be a very big market for us. But actually more exciting than that is all the other things that we're going to be able to do by building these types of infrastructure, which are relatively dumb right now, but are going to get a whole lot smarter. And I want you to be thinking the way we are about this, that we will be adding these layers of AI and machine learning and other to this type of infrastructure that we're already deploying in city streets and monetizing that in the future. That's a big part of our plan. Just continue. Excuse me. The other thing that's been really interesting about our expansion into Europe is it's allowed me to do something that I wanted to do for a very long time. Those of you who've known me for a long time will know that I've been talking about sponsorship and using it as a means to monetize EV charging infrastructure. I hate to say it, but I've been unsuccessful pulling that off in the United States. And in fact, of all the things that I've ever told you that I would do, this sponsorship thing is the one thing that I've never been able to deliver on until now. We have done the first of them. This is an image of it here at Belgrade International Airport. Tens of millions of eyeballs a year now coming and going from that airport see Beam Global's EV ARC sponsored by the largest and fastest growing insurance company in the region. The other benefit that came from that was we were able to get a partnership with Vancy Airports, which is the second largest airport management company in the world with over 70 international airports, some in the United States as well. They're thrilled to bits with this, so I expect us to repeat this model in other markets. But mostly what we're doing is we're demonstrating this move towards recurring revenue, high margin, through using innovative business models which are unique to Beam. We'll do this in the US as well. It was sort of interesting. It was first past the post was in Europe, and again, it's just another fantastic reason for us to have expanded into that market. So again, when you're looking at, I know there was a lot of fanfare about the sale to the British Army in Europe. People said, well, what else have you done since then? We've been selling in Europe, and we've been bringing these new business models as well in Europe. We don't always announce everything that we do, particularly not the smaller onesie twosie things like that, although they add up, which is again why our revenues year to date are twice what they were in any full year in our history except for 2023. So I'm really thrilled about this, and I think you're going to see us doing a lot more stuff like this in the future for creating that recurring revenue, a very high margin base to add to the other growth that we expect to see. And then just a couple other things in Europe that have been enabled by this. I love this picture on the right here. That's a electric Land Rover charging in Cyprus. The really cool thing about that is we produced that product in our Serbian facility, not the Land Rover, the EV ARC, and demonstrated our ability to put it in a 20-foot shipping container and ship it even to a place like Cyprus, which is not easy to get to. I've been there a couple of times. It's not easy to get to, even when just as a sort of passenger on an airplane. That's a really big deal for us. Also signed a government contract first outside of the US as a result of that. We have this opportunity, as I said earlier, to get into the Middle East and Africa, and we're bringing in purchase orders from that part of the world. I don't believe we've even scratched the tip of the iceberg yet, but I think that 2025 will bring us a lot more action at that market as we're growing into it. And what we've demonstrated is within our facilities now, we have our facilities set up to make the product and again do it less expensively than we can in the United States, which will broaden our margins. So the more and more revenue we generate in Europe, the broader our margins should get, and the closer to that 50% gross gap, which I have been telling you is my target and remains my target. And with every day and week and month that goes past, it becomes a more and more attainable target for us. And then Here's just a couple other things I already mentioned. We're making EV arcs in Europe now. Also made the first beam spot structures there, as I mentioned, because we have such fantastic automation around manufacturing streetlights in that place. It was the ideal place. And we'll continue to make beam spot structures in Europe, frankly, because it's so economically beneficial to do so. We can get a lot of them in a 40-foot shipping container. And then we will stuff them with electronics and batteries and everything else in our Chicago facilities, most probably, for the US market, and then stuff them in Europe for the European market. You're looking at an image of a beam bike there. That's a great, I'll cover that a little bit more as I go through products, but it's a great new product, and we've just finished the first of those in our European facilities. We're making Beamwell in Europe as well. Then we've got a great deal of room for expansion with very little capital investment over there, because as I said, we've got 6 acres and 250,000 square feet under roof. In the US, big move here is moving away from that government revenue again. Third quarter this year, we announced our revenues, which were missing $8 million worth of federal revenues that we got in the same period prior year. And so how do we fill that gap? Well, we filled it largely with commercial stuff. We've often been accused of being a government shop. That's clearly not true. 50% of our revenues, in fact, over 50% of our revenues in the third quarter came from commercial customers. That's growing back now. And again, it's part of our diversification and our move to make sure that we are not reliant on or negatively impacted by any slowing in particularly the US federal government. Receiving steady stream of purchase orders in the US throughout the year, again, including from the feds, just more slowly from them. But importantly, we think we're going to get a return to those order levels in 2025, the same stuff that we saw in 2023. There's lots of indications for that. It's not just an opinion. We have lots of indications for that. We're going to continue with this diversification strategy, more products, different types of customer verticals, and also the sales force multiplication in the US as well, agents, resellers, and distributors. And then we think we're going to see a return to some federal activity once the election and the inauguration and everything are passed and people sort of calm down a little bit about this. Okay, let's talk about the products very quickly. I'm really excited about some new stuff that we've got coming out here. First slide, I won't spend a lot of time on this because you all know about the EV ARC, rapidly deployed, highly scalable. We've got a couple of thousand of them around the US and globally now. Just a fantastic product. People love it. And I think we've got many years out of this. We deploy that thing in an hour. It takes 18 to 24 months to put a grid-tied charger in the ground in New York City, our largest municipal customer. Just with those guys last week, still have a great relationship with New York City and looking forward to helping them with some other stuff in the future, like for example, well, actually, before I move on, can't resist bragging about this. There's 3 EV ARCs operating during Hurricane Helene. They survived 8.5-foot storm surge, 140-mile-an-hour winds, and continued to generate and supply electricity and report to their customer, the U.S. Army, or actually that might be Veterans Administration, but whoever it was, one or the other. Just a fantastic, robust product. A time when we're seeing more weather events and more reasons for the power to go out, our ability to keep operating under those circumstances, just brilliant. Let's talk about BeamBike quickly, though. Okay, so BeamBike we developed actually in response to a major city who came to us and said, hey, we've got people who are charging electric bicycles in their apartments. The bikes are catching on fire and they're burning themselves and other people to death. Can you give us an outdoor charging solution? That's why we developed it, BeamBike. What's great about it is it's developed on the EV ARC platform. So we didn't have to do a whole lot of re-engineering and we haven't had to change the factory around much, but this will charge a dozen electric bikes. Well, we developed it for the purpose that I just described, but it turns out now there's a great market for these things in resorts, large campuses, tourist towns. The more we dig into this, and the more people we talk to, the more we find out there's actually a massive opportunity. There's a huge growth going on in electric bicycles globally right now. Charging infrastructure for them is a real problem. And I'm looking forward to the time when you or somebody that you know will go to a resort somewhere and say, hey, we want to take a couple of these bikes for a spin. And they'll say, okay, we'll put it on your room charger right there on the EV ARC. I think we feel very optimistic that we're going to see an awful lot of sales here, which are actually not to do with the original reason that we developed the product, which was to stop people killing themselves in apartment fires. It turns out there's a lot of other really great opportunities for this product as we see the expansion of electric bikes globally. So very proud of that. Love it. And just showed you the first of them coming out of the factory. Beam Patrol, similar, except this one's set up for law enforcement. Electric motorcycles make excellent law enforcement tools because they're silent. They don't require maintenance. You don't have to get fuel to them. We already have customers who are operating these as border patrol, for example, and they love the bikes, but it's very hard for them to get charging infrastructure. So what we're offering is a bundle here, single throat to choke. Police department gets the bikes, the EV ARC, all the fuel they can ever consume, and all the infrastructure they need. They don't need to do any integration. They don't need to deal with multiple vendors or anything else. And of course, for us, the great beauty of this is the revenue per product with this and with BeamBike and with others greatly increased. So while our ASP with EV ARC is around $70,000, the ASP on a product like this will well exceed $100,000. We get more revenue for the same number of products produced, and just a great value proposition for our customers. Read the press release on this one, particularly read the quote from the police chief. He knows what he's talking about, and you'll see why we feel so bullish about this. And by the way, these are not for the US; they're for the US and for the rest of the world. Beamwell, incredibly intelligent product. This is again on the EV ARC platform. We can take salt water, brackish water, or dirty water and turn it into clean water. We provide electricity for refrigeration and medical supplies and for cooking. And then we provide highly ruggedized e-mopeds to deliver food, fresh water, medical supplies to those people who need them. This product's been designed specifically for war zones and for post-disaster, post-hurricane type environments where the infrastructure, fresh water and electricity infrastructure is wrecked. This will never be our largest seller, but the revenue per product is great, and also we expect to get a lot of attention for this. Part of the reason I've just been in the Middle East is because we're working hard right now to get the first of these into Gaza for NGOs to prepare food and fresh water and refrigerate medical supplies for the people in Gaza, the non-combatants, because over there almost 100% of the fresh water and electricity infrastructure has been destroyed. It doesn't do you any good to get food in there if you can't cook it and you can't clean it and people haven't got any water to drink. So we're working hard to solve that. Technology's done, but we don't have the political piece of it sorted out yet. We're working through that. But again, post-hurricane, and any disaster zone, any war zone, unfortunately, the world's providing us lots of opportunities for that product, and we're not exploiting them, but we're certainly going to help where we can. Okay, BeamSpot, we've talked a lot about this already. Again, manufacturing the first of them now, standing up the first of them, and already sold the product. It allows for curbside charging in a way that no other product in the world can. The street light stays on if there's a blackout or a brownout. It has a light wind turbine, a tracking solar array, and then the column is full of our proprietary batteries, cylindrical shaped batteries. This is a perfect mounting asset in the future for other items like picocells for 5G, all kinds of sensors and all sorts of other stuff. So don't be surprised to see us further enhancing this product in the future, generating a lot of data and solving a lot of other problems for our customers. I think it'll be very popular in the future. And then just a few other things that we're doing. We're on the battery side, we're making continued improvements to our batteries and to our battery management services software. We are growing our core streetlight and energy infrastructure business in Europe. We're getting into the smart city piece, adding sensors, AI, and that sort of stuff, as I already mentioned. And the big thing is we've now got over a dozen products that we're taking into 18 different nations, and many others that we haven't yet deployed them, but that we're targeting. Whereas we only had one or two products a couple of years ago and selling into one nation. And then again, these resellers, agents, and distributors getting our story out there to a much broader audience. A couple other little things here. Some of you might not see too much of value in this, but we keep adding patents. That makes the company more valuable. That also increases the moat, the barrier to entry across us. And then this one, I know that sometimes this gets a smile. We get awards from time. Now, can you say, why do we get awards? Does it really matter if Desmond was named the Sustainability Hero of the Year award? It certainly doesn't matter to me very much, except for one thing. It gets us increased audience. It gets us in front of people. That's Gavin Newsom, Governor Gavin Newsom, that you can see in the top right there. Whatever your politics might be, that man runs the largest, fifth largest, sixth largest economic sovereign state in the world. He spent an hour with me learning about our products and everything else. Of course, California remains one of our largest customers. It was a really very gratifying to have this type of attention. And a lot of this comes because we do get these types of awards. We don't spend a lot of time, energy, and money on these things, but they do give us great visibility. In fact, we don't really spend any money on them. Okay, let's talk about this. This is a subject that comes up every day with me. Desmond, you don't believe in the company because you're not buying the stock. Okay, bunk them. utter nonsense and frankly a little bit offensive. My entire life is invested in this company. You ask my family how often I'm at home. Everything that I have financially and everything else is invested in this company. I want you to understand that if we're not buying the stock, and this is not just me, this is the management team and the board, it's largely because of what you're looking at on this slide here. The black areas are statutory blackouts. We are forbidden from trading during those black areas. And so what you can see there is we have a little piece of February and March, we have a little piece of May and June, we have a little piece of August and September, and a little piece of November and December. Just in blackout again right now. We are forbidden from trading the stock at any other in any of those black periods. So then why don't I buy it during the green periods? Because I have what's called MNPI. The material non-public information. That's any type of exceptional order, any acquisition I'm working on, any partnerships I'm working on, any geographic expansions that I'm working on. I don't make that judgment myself, by the way. I consult with our legal teams, and they tell me whether or not they think the information that I have rises to MNPI. What I'm going to say to you is, I always have MNPI. Look at the deals I've just described to you. Look at the acquisitions that we've just talked about. Look at the geographic expansions. Look at the new products that we brought out. These things are considered to be MNPI. None of them happen in 5 minutes. I'm always working on those sorts of deals. So if you don't see me buying the stock, it in no way is an indication of my lack of faith in this company. Clearly, that's not the case. It's simply that I'm either in a statutory blackout or I'm in possession of MNPI. And I take it one step further and say this to you. If you do see me buying the stock, that means I don't have MNPI, and that means I'm not working on some big and not business as usual type of deal for the company. And that's just not me. I am going to be out there trying to figure out how to take major steps to grow this company. I won't win all of them. In fact, I'll lose more of them than I win because I always drive a hard bargain. But because these transactions take a long time, they're spread over multiple months, sometimes even into years. All of those times I have MNPI. So stop thinking that I don't have faith in the company because I'm not buying the stock. I'm simply not able to because of the steps that I'm taking to grow the business. And again, it's clear that I've been doing that in history, and I don't think you should expect that I'm going to stop right now. At some point, Beam will become large enough and mature enough to where no matter what we do, it'll be viewed as business as usual. So when you see CEOs of large companies buying their stock, that's because they are in a position of maturity where they're not doing needle-moving things. If they are, they're not allowed to. But we're not there yet. We're still kind of young and very scrappy, and we're still doing very extraordinary things. And so whenever I have any of that in my head and I'm working on it, I'm forbidden from trading. I just hope that's cleared that up because, frankly, I'm getting sick of answering the question. Right. Okay, just very quickly, what I'll run you through. I've been on the road a lot. London, I met with the Office of Zero Emission Vehicles over there. The Beam Spot's a perfect product for the UK. In fact, I'm from Scotland originally. I was a big part of the thinking in that. Met with several other groups over there as well. They're electrifying like crazy. In fact, they're not waiting until 2035 to ban internal combustion engine vehicles. They are doing it in 2030. So they need a lot of infrastructure and they need it quickly. In Paris, I met with several large bike sharing companies, amongst others. And that's, of course, because we've learned that Beam Bike is such a valuable product. I can tell you what they'll all tell you. Everybody wants to put electric bikes in cities across the world, but nobody can figure out the charging infrastructure because they don't want to dig the trenches. They don't want to get the utility involved. They don't want to have to go through all the easements and leases and everything else like that. We solve that problem. And so we're going to be selling hard into that space. In Belgrade, I was there obviously to meet with our fantastic team, but also to do the ribbon cutting on our first ever sponsorship deal and to do several other business development meetings while I was there. It was a really fantastic and important meeting. Again, that sponsorship deals, recurring revenue, high margin recurring revenue. Addis Ababa in Ethiopia, I've already mentioned why I was there. They've already banned the import of internal combustion engine vehicles. Working at the governmental level there, a lot of aid from the US Embassy and US federal government who would like to see us being successful in that market for all sorts of reasons that go beyond Beam and its shareholders, but also working with several large enterprises over there too. Everyone's having to electrify, so they all need charging infrastructure because they can't buy internal combustion engine vehicles. So it's a poor country, yes, but it's poor. Let's define poor. Could we put 1,000 units into Addis Ababa? Yes, we easily could. Do the arithmetic. And then I was in Amman in Jordan. Apologize for the appalling spelling mistake. That is Amman, as I already mentioned, largely to move forward with our Gaza plans, but also to expand the sale of our products into the broader Middle East. And then finally in Rome, in Italy, to meet with Benzina Zero and a bunch of mayors and local governments to sell our products in those markets as well. So I just put this slide in here because I want you to know that I'm very active. I'm on the road a lot. I'm talking to a lot of people. I'm assisting our sales teams globally. I'm sitting in the larger meetings and all that sort of stuff. And I'm trying to put deals together which will really move the needle for the company. Unfortunately, that will create more MNPI for me, but I don't care about that. I care about growing the business and closing the kind of deals that will do that for us. Very quickly, because I'm running out of time here, let's just look at a couple of things that we've got here. We're moving forward. Again, everything that we've done previously, that 2023 growth, that was all with a single product and largely to a single customer. We've now got over a dozen products, and we're moving into 18. We're in 18 nations, and we're targeting many others. So vastly improved and vastly expanded opportunities across the country. These partnerships and the bundles that we're doing, that's going to increase opportunities for us, but it's also going to increase revenue per product sold, which is great. Still have that $200 million pipeline. Kind of that, as I said, that's a bittersweet number for me. Great opportunity, but we need to be closing that into backlog. We know that. If you're thinking about writing to me and telling me I need to convert more pipeline into backlog, don't save the time. Do something else. We know it. We're working very hard on that, and we're bringing in more sales resources and everything else, as you can see on that last bullet point there. And finally, we still have a $100 million line of credit, which is untouched. Great dry powder. We're getting into these geographic expansions, and that's largely because there's just a huge amount of opportunity out there, but secondarily because it allows us to immunize ourselves from any shift down in the federal government, where the majority of our sales came from in 2023. We're finding other ways to backfill that. Again, I think the feds will come back until that, and so this will all be accretive rather for us. Making our products better, making them less expensive, and we're getting a lot of help as a result of the acquisitions that we did there. Certainly, Europe's going to be a very important part of the way we're playing. We're already selling there, and we're already growing our core business there. So you'll see a lot more going on there in the future. And then Africa, I just talked enough about that for a second ago, and also the Middle East. So these are just huge new markets that we've never been active in. And we've got a dozen products now instead of one to take to it. So the success that we had in the past should be augmented by all these things in the future. Lumpy as it might be, we're not going anywhere except up. Okay, now I just want to take you through this very quickly as well, because this is an important thing for you to understand. And again, this is not pro GAAP. This is pro forma. This is just illustrated. It's not even a forecast of what next year looks like for us, although I think it's some strong, very important indicators in it. I just want to take you through this thought exercise. If we get back to our 2025 revenues to the same level that we had in 2023, so not even any growth from 2023, that would give us 67.4 million in revenue in 2025. I feel very strongly that we're going to get there. If our unit economics in 2025 are the same as they were in 2024, in other words, the cost savings, the cost reduction, everything else extend into 2025, and I think they'll get better. They're not going to go away. I think they'll actually get better. That would give us a gross margin of 24.5%. And if we have a 24.5% gross margin on 67.4 million, that means we make a gross profit of 16.5 million in 2025. If our expenses are the same as our 2023 expenses, net of non-cash stuff and extraordinary items like the acquisitions I made and all that sort of stuff, we'd need about 14.2 million to cover what would be the 2023 loss under those circumstances. Well, with 16.5 million of gross profit, we'd end up with 2.3 of positive cash at the end of it. This is why I've told you that cash flow is very much in our sights. It's simple arithmetic, and all of this is based on stuff that we've done before, except for will we hit the 67.4 in revenue in 2025? And again, we did it in 23 with one product and essentially one customer. We're moving into 2025 with these vast improvements in total addressable market, many more products, and again, we're actually bringing our costs down. They're not going the other direction. So that's just a useful thing. Again, it's not a forecast. It's not GAAP. It's just a back of the napkin calculation for you to see the way I'm thinking about the business, except I'm more aggressive than this. I just want you to understand what we think we're looking at there. Okay, just drill these couple of points in again. We do not have a going concern. We have improving gross profit. We have a clean balance sheet and a fantastic cap table. And I don't know of another company that has less shares outstanding. 14.7 million shares. That's probably 6, 10 20 or 30 times less than many of our peers. And at the end of the day, that's going to mean a very interesting and unusual EPS potential for us. And of course, that's what we're aiming for. So you're looking at a company that's clean, that has no debt, and that manages its money with a great deal of discipline. And yet, look at all the magnificent products that we've brought out. Look at the acquisitions that we've made, and look at the tremendous new markets that we're operating in at the moment. It's a very clean and tidy story, and frankly, managed with a great deal of discipline. So, last slide, I think, or last but one. Hugely increased TAM. Through the geographic expansion and the product expansion that we brought in, increased barrier to entry through the acquisitions that we made, through the patents that we have and everything else. Reduced reliance on third parties. I love that part of it. I hate paying people for money. That's stuff that ends up breaking. Deeper and wider moat. We've expanded our verticals, as illustrated by the fact that more than 50% of our revenues came from non-government customers in the third quarter. We're expanding our sales force, but without expanding our costs. We don't have a going concern. We have no debt. We're improving our margins, gross and bottom line, and you can see that we can model cash flow in a very believable, realistic, and near-term horizon way. A very attractive capital structure, clean balance sheet, and then the macro market conditions. I'm not trying to cast myself off as an expert here, but I think we're starting to see a stabilization of inflation. We are seeing decreasing interest rates. We'll see what the Fed does this month, but something along those lines. Can we hope that some of that $6.4 trillion that's in money markets right now will return to equities like ours? Well, that's where it came from. I think that's a lot of the selling. So yes, I believe we will see that, because I do believe we're going to be in that boom bust boom cycle. That's my belief, my opinion. You guys are probably all more expert than I am on that. But certainly, we're going to keep managing this company with an expectation we're going to have tremendous growth, not just in our revenues and our profit, but also in our share price and volume moving into the future. And that is that for me at the moment. I think we just want to flip one more slide here just to show you the last slide. And again, my thanks, and I'm going to hand it back to Luke now for closing.
Okay, well, thanks very much, Desmond, for that. Certainly a lot of information packed into just over an hour. I definitely want to say for myself, sitting here in San Diego, seeing what Beam Global are doing all around the planet, it's very exciting. I want to remind the audience that I'm here for the information you need about the company and its activities, of course, within the confines of Reg FD. On the slide in front of you now, you can see my contact information, so please feel free to reach out to me at any time with your questions or comments. And if you want to speak with Desmond, he is definitely willing to spend time with you, our shareholders, recognizing, as we all do, that you own this company as we all work for you. Obviously, he's very busy. He's doing a lot of traveling, as you can see in the slideshow. So please get in touch with me, and I'll do my best to coordinate things with Desmond and get things set up. But I'd just like to thank you for your time and support of Beam Global. I wish you peace, good health, and happiness in the holiday season. Thanks very much for joining us today.